Let's talk buybacks now. Salesforce expanded its buyback authorization by $10 billion last week. Its share price surged higher on the heels of the announcement, though investors like Warren Buffett tout that buybacks are beneficial to shareholders only if made at value accretive prices. So the question is, are all buybacks created equally? And by the way, there are a lot of them this year. They're projected to top $1 trillion for the first time in a calendar year this year. Investment research firm VerityData's Director of Research, Ben Silverman, joined us now to talk about this. Ben, it's good to see you. Thanks for being here. So when we talk about the different kinds of buybacks, right, let's talk about Salesforce first as an example, because the company said it was doing this buyback in part because of dilution from stock awards on the other hand. So talk us through kind of the technicals of that and what it means.
Thanks for having me, Julie. Yeah, so Salesforce's buyback was an interesting one because Mark Benioff was very frank about it. The whole purpose of the buyback is to offset stock-based compensation expense. And at the company, if we look at Q3, because they haven't issued their Q4 10K yet, that expense increased 22%, in the 9 months ended October last year. So their stock-based comp expense is rising, and their stock-based comp, they're still issuing a lot. So they're just using it to, knock that out. They're not, in the end, your net share count is not going to reduce year over year because of that. And, they're not talking about being opportunistic with it. They're just talking about buying back stock to simply, offset that dilution.
Well, and when we listen to certain political rhetoric from various members of Congress talking about it, you can get different points of view. Specifically, I'm thinking of Elizabeth Warren, who kind of has a blanket approach to buybacks, which is all of them are bad. Just wondering what happens with legislation in the U.S. if there were to be more of a concerted pushback against buybacks on the legislative agenda. What would that mean for corporations and in terms of their planning as well?
Well, there's certainly already been some pushback. We have the 1% buyback tax this year, which is new. That doesn't seem to be deterring, managers from executing buybacks. It's just simply the cost of doing business. There's a proposal out to, push that to 4%. It's certain that, the Republicans are not going to, back that whatsoever. They've been very vocal about not backing any tax on buybacks. I think, it's one of these issues that it's hard to resonate on Main Street with this issue because most people, including a lot of investors, don't know anything about buybacks and what they mean. Politicians are, seizing this because, it's an easy connection to make to say that buybacks, help increase executive compensation, and line the pockets of shareholders. Well, we want shareholders' pockets lined. For me, the question is not so much politically, it's just, from a business perspective, are companies being smart about it? Are they making it a reasonable part of their capital allocation plan? So that, that's the big thing. And that gets missed in the political rhetoric.
When investors are trying to figure out if it's a good buyback or not as helpful buyback, right? Warren Buffett, as we mentioned, he talked about buybacks and the quality of buybacks in his investor letter. And he said, when you're told all repurchases are harmful to shareholders of the country or particularly beneficial to CEOs, you are listening to either an economic illiterate or a silver-tongued demagogue. And he made it clear that he thinks that if they are value accretive, then they are helpful. How do I, as just an everyday investor, figure out if they're value accretive?
Well, this is what we work with our, clients on, is we're trying to help them identify companies that are buying back at good prices. And one of the funny things about buybacks in the financial media is that there's a lot of coverage around the plan announcements, with Salesforce being a good example. The company announced the $10 billion buyback plan expansion. What is not covered as well and is ignored a lot by sell-side analysts as well is the actual execution of the buyback. And the sterling example in recent years is Meta Platform. There was a lot of, positive buzz when the company announced their first buyback program several years ago, added expansions to that. But if we look, since 2017, the company's bought back almost $100 billion of stock. the stock is still down. The stock is down 30% from that average buyback price. So they did not do a good job of repatriating capital, at a good price. For investors, what's really important is listen to what management is saying. We track insider transactions, and so that's what management's doing. Buybacks, you can look at what management's doing. Also, listen to what they're saying. Are they even talking about buybacks on their conference call? You were all just doing a segment on Ford. Ford announced a buyback last year. They haven't mentioned it since. They started to do some execution in Q4, but it never comes up. They don't talk about it as part of their capital allocation strategy. That signals to me that it's not important to them.
Very interesting. So investors should watch not just the actual dollars and cents, but then the execution of the buybacks as well. Great point here. Ben, thanks for being here. Appreciate it. Important topic. Ben Silverman, VerityData Director of Research. Thank you.